Hey everybody, welcome to Mortgage Today for Tuesday, February 21st, 2024. And oh, what a day it was. We had a day off yesterday due to the President's Day. The market's got back into full force today. UMBS were up about 2 basis points on the open. Futures on the S&P 500 and NASDAQ 100 are pointing to a down day when Wall Street reopened after Monday's public holiday. Nvidia Corp declined in pre-market trading ahead of its widely anticipated earnings report due on Wednesday. Discover Financial Services surged after Capital One Financial Corp agreed to buy the credit card issuer in a $35 billion deal. Capital One declined on it. Traders have in recent weeks moved Federal Reserve rate cut expectations out to June from March as a phalanx of Fed officials warned against over-exuberant expectations of policy easing, and economic data continued to surprise to the upside. Some have even raised the possibility of further tightening. Former U.S. Treasury Secretary Lawrence Summers said on Friday there is a meaningful chance the next move is up. That will make investors wary ahead of the Fed January meeting minutes to be released on Wednesday. The upcoming week won't have much in way of market-moving data. However, we will get our FOMC minutes on Wednesday. This should give us some more insight into the Fed is going to start cutting rates. The CPI report last week caused traders to pare back their bets on rate cuts this year, although shelter inflation was the big driver. Shelter accounted for about 2/3 of the increase in the CPI last month, and Shelter accounted for about 2/3 of the increase last month. Consumer sentiment in February is mostly unchanged from January, according to the University of Michigan Consumer Sentiment Survey. Consumers are generally getting more constructive about the economy, although there remains a partisan gap. Year-ahead inflation expectations ticked up from 2.9% to 3%, which is still within the pre-pandemic 2.3 to 3% range. Longer-term inflationary expectations remained at 2.9%, which is still above the pre-pandemic range of 2.2 to 2.6%. Some encouraging data from the spring selling season, which is more or less underway. New listings were up 9.5% compared to a year ago, while median prices were more or less flat. Active inventory is up 13.9%. Bonds got off to a slow start despite the holiday-shortened week. Yields began in slightly higher territory in Asia, but rallied back to unchanged at the start of the U.S. trading to slightly stronger levels by the end of the European trading. The second half of the U.S. trading day brought more selling, but not enough to make bonds into weaker territory as of the 3 p.m. close. More importantly, all of the above took place in a narrow range, arguing against deep analysis. UMBS ended the day up 11 basis points at 100.34. So at 100.34, it's putting in this very tight range. We have the Fibonacci line at 100.428, which hasn't been tested too much. And then we have the 200-day moving average, which is the blue line. And we have the 50-day moving average black with a floor of the 100-day moving average, all of which are converging upon each other. Though you can focus on things that you can control, which is your mind, your discipline, and what you do. So definitely check out a post from our sponsor at wellthatmakesense.com. This is from the book, The Fifth Agreement. This is all about elevating your business with timeless Toltec wisdom. It's one of the best books per word that you will ever read. So check out the reading notes video at wellthatmakesense.com.